Cool. I think we're live. We'll just let the crowd build, I guess.
Yeah, we'll give it a couple of minutes. Let everyone join in.
Let me quickly share that.
All right, we are looking good on YouTube and LinkedIn.
Your headphones are a bit crackly, Abe.
Are they?
Oh, they're better now.
Yeah, a little bit of distortion, not too bad.
All right, LinkedIn's building.
Yeah, it's a few on LinkedIn, which is fantastic. Give it another minute and then we'll jump into it. Thanks, Chase. All right. Okay. Are we ready to go?
Yeah, let's do it.
All right, let's jump into it. Okay, everyone, thank you so much for joining today into our webinar as we dive into metrics and their importance to you as a business owner, a founder, someone who is operating in sales, customer success. So the agenda for today is we're going to go through, we'll do a round of introductions of our presenters today. We'll go through a quick introduction of what metrics are and why they're important to you. What metrics mean to private equity, and that's going to be presented by Luke, and metrics to understand for your customers, which Andrew R is going to run through, and then how to close more sales by understanding your sales metrics, and Andrew M is going to run through that today. And at the end, we're going to go through a Q&A as a part of that as well. Just a heads up, we're going to ask some questions as the webinar is going on to try and get a bit more engagement from people in the crowd. And we also want to try and get your perspective on what you think are important for metrics and where you see them being really relevant to your business. So please, I ask, get in the comments, ask the questions, answer the questions as we ask them. And it'll be great to get as much interaction as possible to make this a more engaging webinar. So first up, we'll go through the introductions. I'm Abe,
Sorry,
CEO.
Abe, mate, you might want to just adjust your cord into your computer or something. You're getting a fair bit of distortion there.
Yeah, okay. How about now?
It just crackles a little bit when you're towards the end of your sentences. Yeah.
Yeah.
It might just be your plug's not all the way in properly or spun. Yeah.
Yeah.
Yep. Yeah, that sounds a bit better for now.
Thanks, Chase.
So you want to go through, Andrew? You want to kick off with Andrew Martin? You want to kick off with intros?
Yeah, of course. So good morning, good afternoon, depending on where you are in the world. So I'm Andrew. I am the CEO of Teamgate, and I'm pretty excited to talk about metrics today. We like to pride ourselves as a data-driven CRM, and we like to impart that on our customers as well to fuel all of their decision making with data and with things like sales insight. So excited to talk about metrics today, especially sales metrics.
Andrew Rudd.
Yeah, I'm Andrew Rudd. I'm an account executive at Barometrics. What I do there is just go through product walkthroughs with different clients and customers of Barometrics, walk through different insights, and also, help build things like segmentation and understanding what metrics they can get using the tool.
Awesome. And I'm Luke. I'm a principal advisor for Xenon Partners. We are the private equity firm that owns both Teamgate and Barometrics, and I work a lot of the time with the teams inside the organizations to figure out what metrics really matter, what metrics are driving the success of their business. And then from a fund perspective, my interest in metrics comes from assessing new companies, potential acquisitions, and how we look at the health of those businesses before we bring them on board. I've really enjoyed working with the gents on the call, and I'm hoping we can get to some really good discussion around why metrics are important and how you can actually utilize metrics to drive success in your own businesses.
Awesome. Thanks for taking that, Luke. I'm Abe Deemer, CEO at 5CRM, and my headphones are distorted. So please let me know, keep me updated if that keeps happening, and I'll look to adjust as I can. If it happens again, I'll just dump the headphones and we'll go from there. But that's the round of introductions. And my role during this webinar is simply to facilitate the conversation, provide any answers to questions that may pop up in the chat, and also just to get some interaction between the speakers and the audience. So please feel free to put those questions in there so Luke and the two Andrews can provide some answers. But first, what would be really great to run through is to talk through metrics and what our initial thoughts are when we hear the word metrics. And so I'd love to hear from our speakers first about what they think of when they hear the word metrics. So Andrew M., I'll pass to you first.
Yeah, sure. Thanks, Abe. And I think when I hear metrics, it takes me back. My first exposure to metrics was probably as a kid. So playing sport, growing up, watching sport. I was a mad rugby fan in Australia. And even without knowing it, everything is based around metrics, right? So whether it's tackles made, points scored, and the like. And then a movie came out called Moneyball, which I'm sure a lot of people have seen in the comments. If you haven't, go check it out. But it's based on a baseball team. It's a true story that they drove their team and their selections based on metrics, not the big names and the things like that. So when I think metrics, I think performance, whether it's good, bad, identifying things to improve and the like. So yeah, that's my initial thoughts. It takes me back to a kid and sport and performance, and that's developed as I've moved into the business world.
Awesome. Love a good sporting analogy in business. It's a time-tested way to do things as well. So, and I love the Moneyball analogy. Great movie. If you haven't seen it, definitely go and have a watch. Luke, what about you?
Yeah, I think metrics automatically makes you think like measure, because you've got data and then you've got metrics that is measuring data in some ways. But when I think of it holistically, I actually think of it from like going to the doctors. And when you go to the doctors and you get like your annual health checkup, you might get your blood pressure checked, you might get your pulse checked, your cholesterol, whatever it might be. These things that are being checked are always there. They're always happening in the background. Those measures are there, but it's not until you actually start to look at them and measure them that you get a sense of what's going on. And so that's what metrics is about to me. It's bringing that data that is always there in the background forward so you can measure it and actually start to improve what matters. So yeah, it really sort of brings to mind me the vision of the doctor's checkboard. And as they're going down and they're listening to your heart, they're checking your blood, they're doing all that stuff they do. They're bringing that data to the surface so they can actually action something about it.
Yeah, absolutely. And the key thing that I look at when you think about the doctor as well is that, and we'll get into this a little bit later, is that they don't just get the metrics and go, okay, this is what I think you have. Here's some, paracetamol, off you go. They actually use that to do that next level analysis. And I think that's a really important bit that people miss. when they start to look at metrics. So that's great.
And
Andrew,
staying with that medical example, it's like the doctor doesn't know what to improve on or fix or treat until he can see what matters, right? And that's the same in business. That's really the same line there. Yeah.
Yeah, absolutely.
I
Andrew,
think we had a similar line in our gap selling webinar, Abe.
Something like that, I imagine. All right, Andrew, over to you.
Yeah, over the past couple of years working with metrics and companies that use metrics, what I kind of see is just a clear vision of, how your business is doing and kind of more like a compass on what direction your metrics are going. So things such as LTV, user churn, MRR. So it's kind of more of a clear, a clear view of where you're going and how your company or business is performing.
Yeah, I love that analogy of the compass there, because it's like your GPS, your navigation through a complex environment is having those metrics and being able to follow them to where you need to get to, which I think is really important. And for me, I look at it like a paint by numbers scenario, right? You get this painting with a lot of complex lines, doesn't really make a lot of sense. You just have all these numbers in there, and then when you start to fill them in and connect the dots and finish that paint by numbers, it comes up with a beautiful picture of what you expect to see. And it's almost like where you envision the business and where you want it to be comes to fruition once you're able to fill in all those numbers and start to understand them and build out that picture. And Steph has jumped in the chat and said insights as a part of the metrics, and I think we've covered off on that when we look at the different areas that we've covered there. And I'd just like to remind everyone as well that feel free to jump in and put some answers in there to some of the questions that were asked. But one thing, looking at the speakers that we have on today's webinar, there's a lot of different experiences in different companies. When we look at Teamgate, Baremetrics, and Luke is one of the people on this webinar that's had some experience across the broad spectrum, where he's looked at the tactical and the strategic level, as far as working in a company at Dream Factory as a director of ops and a GM, and then moving into at the fund level with Xenon. And so, Luke, I'd love to know your perspective on the tactical and strategic level of metrics and the method or reasoning behind tracking these metrics at those different levels, and some of the, I guess, the different components that you focused on when you compare tactical versus strategic.
Yeah. Thanks, Abe. Look, I think it comes down to your standard operating procedure as a team. In your day-to-day or in your BAU, there's going to be certain things you look at intimately to understand whether the things you're doing are having an impact. And really, when it comes down to SaaS companies in particular, there's going to be some core tactical metrics that represent the lifeblood of your company. And now, I hate to say it depends, but if you're a product-led growth company, if you're a sales-led growth company, if you're going something that's services-based versus hardware-based, there'll be different components of that, tactical health that you need to look at, but you need to be looking at something. And that's the most important thing. You need to figure out what it is that is defining success in your current trajectory, what it is that is starting to drive you towards achieving your goals, and you need to start to measure that. And from the tactical level, generally what we're going to see in a SaaS company are things like MRR, ARR, churn, contraction, expansion, and net new MRR. They would be the fundamentals. And people can argue against that, and they'll say, well, what about net revenue retention? What about new customer? What about sales velocity? Those sort of things. Absolutely. If they are the metrics that represent the lifeblood of your current growth, then yes, you should be measuring those. But for me, if you want to strip it back to bare bones and have a look at what defines success in a basic SaaS company, those would be the components that I'd look at. So as part of our position as a fund, when we're looking to bring on new companies and run our own companies, if we can keep it at that basic level, then we start to collect that data, we can then overlay platforms like Teamgate, like Baremetrics, to really drive insights. And so what I'd like to show is just a quick example of what I believe is like my basic, the very basic metrics that any given SaaS company should be looking at, and what we use as our benchmark. And Andrew, could I get you to share that Teamgate, the slide there? So what we have here is really one of our core data collection tools when we start a new acquisition. And we look at that and we say, can you please put down here the basic metrics that you're currently tracking? And to be honest, surprisingly, sometimes it's really hard for founders or startups to actually get this information in a consolidated format like this is in front of you. And you might say, well, it's only a simple Excel. And yeah, it is. But you might have platforms like Stripe, platforms like QuickBooks, Xero, and all these sort of things. What is your source of truth, right? And how can you put that into a usable format? This is what this represents for us. So you can see there, this really has those fundamental components of a SaaS company: MRR, new expansion, reactivation, contraction, churn, and net new. Again, if you're looking at hardware, if you're looking at service revenue, other revenue, you might include different things here. You might want to separate out B2B new versus B2C new if you're in a platform that supports that. Either way, you need to have something that you can start to measure. So this here, to me, Abe, this is what represents those tactical metrics that really start to drive day-to-day insights and tracking. One important thing to note about this slide in particular is that trailing 6 months compounding, right? We're not just looking at a point in time anymore. We're looking at growth. And to Andrew Rudd's point about metrics being a compass, unless you're looking at trends over time, you're not going to understand the direction you're traveling. So that's what this sheet here represents. Andrew, remember, if we could get you to slide to the next one, what you'll see there is that this to me now moves into the strategic realm of metrics. And there's a lot of information here, and this looks like a really messy spreadsheet. But what you'll notice is the reason there's all those div errors there, and I've deliberately left them in there, is because these are calculations and they are functions that are derived from those core metrics we've already tracked. And what this starts to deliver now is insights into the movement towards your goals. So if you look there in the middle, we obviously cover our gross churn and our net churn. We want to understand how our clients are interacting with us and how they're separating from the platform. We want to look at our average sales price. And again, the rolling average sales price starts to move us into that trend. Our average contract value starts to look at that trend. And then we move into what I would regard as probably some of the most fundamentally important strategic metrics in a SaaS company is LTV and CAC. LTV being lifetime value, CAC being customer acquisition cost. Now, there's been recent debate that I've observed about customer acquisition cost in product-led sales versus sales-led. And the argument is, well, how do you define how much it costs me to acquire a customer? Was it the amount I spent on sales and marketing, on Google ads, on LinkedIn ads? Or is it the amount I spent on product dev for that self-serve product to then be consumed? It, to me, doesn't really matter. What matters is that you're measuring that acquisition cost. However you want to define that and then link that to how much you get back from the customer, that's then going to define how quickly you can grow. Now, the other argument out there is that, well, if I am an emerging startup, I've got a fair amount of venture capital, I'm disrupting an industry, I want to get in at the low level, my core goal is rapid user acquisition, and I don't care how much I have to pay for that acquisition, that's fine. That's part of your strategy. And so long as you're measuring that as you go forward, that's okay. But we know that in the long term, that's not sustainable. So there's going to come a point in time where you believe you've penetrated or captured enough of that total addressable market to then switch focus to becoming more optimal and actually starting to extend the LTV while decreasing your CAC. So that to me, this page now represents the total strategic picture of what metrics will really drive us in our strategic goal achievement. And if we move across to the last slide, how can we use all that in some sort of consumable format to drive insights? This is an example of a company dashboard that you might put together, again, based on something as basic as a spreadsheet, but you can also pull insights here from platforms like Teamgate and Baremetrics. So for us, the top left is our revenue, expansion, contraction, and et cetera. And you can see a trend over time. Our total revenue achievement in the top right-hand corner there, we can see that achievement over time and whether we're tracking against where we need to be. Bottom left, we've now looked at that LTV, CAC, and that ACV because we believe those are the things that matter at the moment. And on the right-hand side there, bottom right, something we didn't have a look at in that KPI spreadsheet was traffic. So how is our funnel performing? Now, these can obviously be flipped in and out as needed, but again, metrics are about measuring what matters. So this dashboard at any given time may change. You might have users in there instead, new user acquisition. You might have LTV as a sole graph that you've put in there, net revenue retention as a sole graph. Whatever it is, metrics is about bringing forth those things that matter and will drive your business forward. So Abe, I hope that sort of gives a brief overview of what I believe the difference between sort of tactical usage of metrics and then how you can move them into a strategic sphere to really drive progress.
Yeah, absolutely, Luke. And I think the key part that really stood out to me is that having these gives you, I guess, a quick overview of health of the company and if it's a worthwhile investment when you look at it from an investor point of view. I would assume that when you ask people for this, it's pretty readily available, all this information. You get a response pretty quickly, or does it take a fair amount of time for people to pull all of these together?
Yeah. Yeah, absolutely. So, sorry, Ab, I just lost you there for a second. But yeah, the amount of time it usually takes for people to be able to pull that. You got me?
Yeah.
Sorry,
yeah,
Ab,
that's right. Yeah.
Yeah. Sorry. So the time it takes, it's actually surprising to me more often than not that how long it takes to get those individual components. And I sort of touched on it at the start, but the idea that we have multiple systems or multiple sources of truth at any given time, because sometimes metrics just haven't been our priority, right? We're really focused on getting that new feature release. We're really focused on that go to market, and we don't care how it happens. And it's not until we're asked to reflect on that we go, oh, well, actually, I think we're tracking revenue over here. We've got our master customer list over here that shows us our churn. We've got our customer success team monitoring this. And it can sometimes take a little bit of time to get all that together. And that's not to say that's a bad thing for you, but when you want to be prepared, and again, when you want to start to see trends and you want to be able to actually drive actionable insights, then you need a consolidated format and a single source of truth of that particular data that you want to actually move.
Yeah, absolutely. So essentially what we look at here is you see a lot of companies that have, different bits of tech where they have stovepipes of information that doesn't necessarily flow into one to enable the business to make those decisions with the best information.
Yeah.
Or to provide them to an investor that's looking to either provide capital to the company or buy the company.
Yeah, exactly. Yep.
Yeah, absolutely. And one thing I think would be really interesting to hear a perspective from Andrew on this question. I know we didn't really get a response from the audience, but Andrew, as the CEO of Teamgate, I'd really love to know, you use Baremetrics, you use Teamgate, you know what Xenon requires for metrics and how we like to do business as far as that goes.
Mm-hmm.
When you look at that, I'd love to understand a little bit more about using those metrics, how it's been able to facilitate growth over at Teamgate.
Yeah, good question, Abe. And I think you can take two approaches to this. So on a personal level or from a Teamgate level, and then also the customers that we help as well. So first and foremost is probably, the ability to track and set things like goals, OKRs, that we can track and track that over week or quarter over quarter. And that really helps when working with a global team and a remote team. And Xenon's been doing it for a while, so we're relatively comfortable. But a lot of our customers come to us and they're very new to remote working, especially with, when COVID kicked off and things like that. So they have a lot of trouble actually setting and tracking what their employees are doing from home and from a remote location. But then at a business level, it enables us to establish a baseline with those metrics. So once we have that baseline, it facilitates things like experimentation, and whether that's an A/B test, whether that's a new script for outbound. But it's that compass, like Andrew Rudd said previously. Without that baseline, we don't know if what we're testing is actually working or if it's not. So using metrics to establish that baseline and then testing against it to improve.
I think that's a really important point there that you bring up around baselines, because often we say, hey, let's change our pricing, or hey, let's introduce this new product. And what we don't stop and take a moment to sort of assess and look at is, what are we currently doing? What's our conversion rate? What are we seeing with this? And developing that baseline. So when we do launch something, we go, oh, okay, this actually had a net positive effect. It worked quite well. And I think that leads into, pretty well what Andrew R is going to talk about next, which is talking about, the metrics to understand your customers. And he's got a bit of a vignette there about some of the experimentation as well and how you can do that with Baremetrics. So, Andrew R., over to you.
Yeah. So yeah, I'm just gonna share my screen quick and show you the Baremetrics tool and some examples you can do with that. So first, what we're here now is at the MR chart within Baremetrics, and one kind of common example, especially with SaaS companies, is price increases. So what we can do is actually take something called annotations and actually mark when we started doing that price increase. So say we start here in the week of March 20th through March 26th. What we can do is type in here, price up to 1.5x. From here, we can save that here within the chart, and this will actually be visible on all the metrics throughout, a tool like Baremetrics. And the good thing about that is that we can see the impact that it has, raising prices up by 1.5x to all your customers and to new customers coming in. With a breakout here, we can also see, week by week or even month by month, what the impact of that is. So we can see, how much of new MRR is coming in based off that, how much expansion you're getting from that test of raising those prices. And lastly, and kind of more importantly, what churn is coming, how many customers aren't happy with the price increase of your existing customers and how many are leaving you. So that will pretty much give you a good insight and good view of what's going on if you increase those prices. So that's one example of using a tool like Baremetrics to use experimentation to see how it can affect all your metrics and pretty much the baseline of your company.
So when I look at this, Andrew, like one thing that really stands out to me with this component is that breakdown that it gives you of the MRR below, where you can see, like, yes, we've increased the price. Is this affecting our new customers? So we're not winning new customers because the price has increased. What's our churn level? And I love down the bottom how it has, the overall change in MRR, which for me is really interesting because we can increase price, our churn can increase, but overall our MRR increases. So yes, we might lose some of the customers because of that price increase, but we're not going to lose all of them. And as long as we have a net positive effect on the MRR, we can mark that up as a successful price increase.
Yep. Yeah, exactly. Just kind of giving a range of overall how that is affecting pretty much all your metrics to see if it is going to give you a positive change, adding MR and net revenue to you, or is it actually going to pretty much add loss to you from too many churned customers based off that price increase.
I think this example too, Andrew, it points to Andrew Martin's point about benchmarking or baselining.
Yeah.
In that if you're tracking along and then you change something and you don't annotate it or you don't record it and then something happens, you don't know what has affected that change. Like you don't understand what variable, and you might change a whole heap of things at once, right? You might do a price increase. You might change your trial sign-up form. You might add some friction to the sign-up process by asking for a phone number. You might all do that in a month's period, but unless you've actually annotated and marked what impact those changes have, then you're not going to know, right, what's the contributing to that shift. So I think another point on metrics is when you start to develop a baseline and you want to start to experiment, which everyone should be doing, you need to be very clear about what changes you're making to the process that are then going to have an effect on your metrics. So you really can clearly delineate what effect you're having. Yeah.
And I think that's a key bit about hypothesis testing, right? Is we don't want to change
100%.
too much, and we need to focus on small changes and measure the results.
Yep, agree.
Yeah, and it's a great point. I talked about establishing the baseline, but it's two-part, right? It's also annotating and working out when you're doing those experiments. And I embarrassingly probably made this mistake a couple of weeks when we had our baseline for our website traffic and we saw a massive spike, and it took me a good couple of days to work out why, because I hadn't done that annotation. So it's a two-piece. It's all good to have that baseline, but it's also important to record those experiments, when they started, what they were, so you can actually work out what's working.
Nice.
Yeah. Another kind of reason you can use a tool like Baremetrics to track experiments was kind of mentioned before was, a new product or a new feature, to your tool, to your subscription. What we can do with, a customer retention chart is to see if that's actually keeping customers happy and keeping them with you to add to your lifetime value, your MRR. So on the customer retention, this can actually be, segmented or, created cohorts. So you can see, how many new subscriptions or customers are coming in based off that feature and how long they're staying with you. Is it something that's, actually very impactful and is helping your customer retention stay longer because it's a feature that is wanted and needed? Or is it kind of something that, it seems nice, but not really gonna, keep customers glued to you? So using this, you can see, if you put out the new product in October and you had 17 new customers come in on that feature and on that month, you can see how long these customers are staying with you and see if it's something that is sticky for your business and for your company. So for like the example here, 41% of those customers already 7 months in are still with you, but that means over 50% have left. So so you can figure out if you need to push that a bit more, improve it, or maybe just hold off on projects at the moment so you're not wasting products and also resources on creating new features, but mainly focus on your base subscription.
And Andrew, one thing when I look at this is that, we have the breakdown of new, churn, our expansion. What we see more and more with SaaS companies is that they're starting to, buy bolt-ons, or when they release a new product and have it, almost like a menu list that you can choose from. When we think about that, are we able to use Baremetrics to dissect and see, okay, well, what are our most profitable products that we have as part of our offering? But then also look at potentially what are our stickiest products. So, people buy this and then they never leave, or maybe they jump in and out of this particular product more often than not.
Yeah, you definitely can. So you can do that with here, kind of go and buy different plans or products, segmenting out to see which customers are staying with you longer. Also up top here, even with the user churn, you can compare by plans and segments to see what product is giving you the most user churn or the less user churn, to see what customers are sticking to what products and giving you more value over time.
Yeah, absolutely. And I think that's a really key component. And then when we talk about, churn and things like that, when we look at Baremetrics, it tells you pretty detailed responses there of customers and who you've won, who you've lost, who's churned. Are we able to, I guess, understand a little bit more through Baremetrics about why people have churned?
Yeah, so we can have this tool here is called Cancellation Insights.
Sorry, Andrew, I think maybe you might need to refresh, mate, to bring you onto the Cancellation Insights slide.
Oh, sorry, what was that?
Oh, you're going to have to reshare. So reshare your Cancellation Insights page.
Yeah, sorry, just some technical difficulties here.
Okay.
There we go.
Good now? Perfect. All right.
Oh, there we go.
Yep.
Yeah, gotcha.
So this tool here would be called Cancellation Insights, and this is what kind of Abe was talking about, is understanding why customers are churning from you. So what we'll do here is have a questionnaire or in-app widget when somebody cancels, and you can have a list of reasons, either automated or why you have, or if you have an idea on why customers are churning. And what we'll do is actually group those up for you, so you can have a percentage of the reasons of why people are leaving you, and also the total cost of MRR coming from those customers leaving you. So this would be good. So instead of kind of just having a guess on why customers are leaving you, you can have an actual reason and a certain reason that your team and your company can focus on. So if pricing is the main issue, you can work on building a new price model for your customers so it's more pleasing to them. If it's technical issues, you can either hire more devs or have your devs focus on a certain issue, such as bugs or inaccuracies. You'll be able to do that with your product.
I think this really speaks to that bridge between the tactical and strategic, in that if a tactical metric you're following is just churn in general, and then you come to a point where your new MRR stagnates and your expansion stagnates, and you're like, well, where can we look to increase our revenue, right? Well, we can decrease churn. It's like, well, how? Okay, so you need to have that additional insight to why people are churning so you can actually address the churn number itself. And I think a tool like Cancellation Insights is phenomenal when it comes to that, because you can dictate exactly what you want to look for and bring those metrics to the surface to actually bring out, actionable insights and get stuff done once you've got the metrics being recorded.
Yeah, awesome. That's and for me, like this is amazing insights. And when I look at the cancellation reasons over there on the left, Andrew, you said that you group these together. Is that is this like a drop down selection menu, or is it like a free text that people put in?
Yeah, so it's actually kind of both ways. So you can actually have this just as a questionnaire where it will just have the list of reasons as a drop down. But if somebody wants to add in a comment under the reason why leaving, you can put that in there as well. So you can have a real reason on why somebody's leaving, not just a general idea.
Yeah, awesome. That's really great insight, and I love to understand why people are leaving, because you can't make things better without that. And one thing, looking at 5CRM that we really try to do is understand more about our customers and what they use 5CRM for. And a really big part of that is, talking to customers and understanding when they're increasing or they're decreasing usage of the platform. And one thing that I think is really important is that if someone's leaving 5CRM, we always like to understand why, because for us, that forms a really important piece of, well, is it something that we need to improve on? Can we, build something to drive more revenue? So I think, that's a really great sort of tool there when we look at cancellations, because it provides you with the, you can't fudge the numbers. It's in there. It shows MRR lost, shows the companies that are lost. And I think the important thing there as well is it even shows you the type of companies that are lost. So particular industry size that we might be losing because of some particular reasons. So for me, that's a really powerful information. All right, cool. Thank you so much, Andrew R, for taking us through that. That was really insightful to see how, when we do these experiments, it's important that we look at the holistic approach when we look at our revenue, the effect that it's going to have on our revenue, but more importantly, how we capture that baseline and understand the changes that are happening as we make those changes. And an important point brought up there by Luke is not changing too much is a really key component. So focusing on one individual component instead of going, we're going to change our sign-up flow, we're also going to change the price, and then we're going to introduce these other variables that come with it, release a new product. We really want to focus on, if we're testing something, we get really specific with what we're testing, as opposed to trying to test multiple things at once, which is really cool. And one thing I think, let's move on to Andrew M. So we've looked at, the fund at the tactical strategic level, and we've looked at, what investors will be looking at as they come in to assess the company for its viability for investment or either for purchase, which is really great from Luke. We've had Andrew R take us through looking at the back end, the customer side. So understanding more about cancellations, why people are leaving us, the churn reasons, and understanding when we experiment, how we can utilize Baremetrics to develop that baseline and see if it's having a positive effect on our revenue overall. But now when we switch gears and we look at Teamgate CRM and Andrew M, we're going to look at our sales performance. So, before we can even think about Baremetrics and looking at customers, we have to win the customers first. And so understanding our sales funnel and how we can optimize that, I think is really important to a successful business. And as Luke alluded to, when you look at new revenue, that's a real key indicator of company performance. If they're able to close deals consistently over time, that looks like a healthy company. So one thing I'd love to understand from you, Andrew M, when we go on this presentation is, how do you utilize Teamgate or your customers, to look at the metrics to monitor your sales funnel and the health that goes with that?
Yeah, awesome. Thanks, Abe. And I guess for this practical to set kind of an agenda, noting time, I'll give a very abbreviated version of how you can use a combination of both, CRM dashboards and also sales insights. And we're going to use them to gain an immediate snapshot of both our performance, but in particular our funnel health. So seeing how our funnel's performing, from top to bottom. And the way I like to use the combination personally is initially I like to use dashboards. Like I said, that's going to give us that high level snapshot of our performance, and that's sort of our initial diagnosis. Luke spoke earlier about the doctors and going through the checkbox. And then I'd like to switch into sales insights, and that's what I'll use to do that deeper analysis and start to get some answers for the things that we identified in the dashboard. So to start off, let's first have a look at a dashboard. So to orientate you to the screen, on the right hand side, top right, we have our our filters. So we can set a time period. We can pick a specific funnel, and then we can also break it down to, a sales team, individuals, or the company as a whole. And then on the left-hand side, we have all of our widgets, and these can be custom built really easily. I've built this one out just for today's webinar. And like I said, for me, this is an excellent place to start. So we've got a high-level overview and snapshot of our performance, and having a look at the dashboard, we can start to see a few things. So in particular, what's highlighted there is our performance in Q2 in regards to revenue closed and deals won is significantly lower than Q1. Now, this can start to give us a few indicators, but the first one is there's going to be a drop off in both revenue growth. And then we spoke a little bit about net revenue retention earlier. And if our net revenue retention is below 100%, it means our current customers aren't staying with us, which means, if our deals aren't growing quarter over quarter, our MRR is also going to start reducing. As we look further into the dashboard, we can start to see that our MQLs have also reduced quarter over quarter. So this isn't a huge reduction; it's down by about 18%. But when combined with our team's output, which is a little bit lower there, we start to build a picture as to why our performance might have reduced quarter over quarter. And as a manager, these clues and indicators should start to prompt questions, right? And these questions can be about a bunch of different things, but the most important part is they have to lead to action. So, are our paid ads effective? Are we targeting the right audience? Is our ICP analysis correct? Are we targeting the right channels? Why is our team's output lacking in Q2? And, the end state is to come up with an action plan to actually address these issues. And I'd love to know from the audience, and I know there's a bit of a lag with the LinkedIn comments, but if you've had a problem with your top of funnel before, what was it linked to? Did you identify what the issue was? How did you address it? And while I'm waiting for some of those answers, we'll jump back in to the dashboard and we'll look for some more clues. But more specifically, we're going to look towards the middle and the bottom of the funnel.
And I really, Andrew, just to pause there quickly, I really like this breakdown when you look at your top and your middle and your bottom, and starting to understand that a little bit more. Because for me, when I look at sales, I think the most important part is being able to really jump in and diagnose what areas are failing you if your sales funnel is going wrong. Because too often people say, we're not closing deals, and they just leave it at that without going in further and going, well, why aren't we closing deals? What stage are people coming off? And not to steal your thunder, but I think breaking it up and looking at it like that is a really good way for people to start to diagnose their sales funnel.
Yeah, for sure, Abe. And there's probably a lot of salespeople watching at the moment that might get upset, but especially with top of funnel, looking at things like our marketing insights, making sure that we're actually targeting the right ICP. There's, it's great to have an increase in leads, but if the leads aren't specific or they're not, within our ICP, are they going to convert anyway? So it's probably going to run into an issue in the middle of the bottom of funnel, and we'll probably get to that as we go through. So as highlighted on the screen there, we previously spoke that our leads dropped 18%. But what's more concerning to me is that our qualified contacts companies and our sales forecast has dropped by over 80%. Okay, so, like I just said, if our leads increased, it wouldn't really matter because we're still not converting them as they move through the funnel. And this is something I definitely want to look further into. So let's jump into my favorite TeamGate feature, Sales Insights. So this is Sales Insights, again, to orientate you to the screen. On the left-hand side there, we have a bunch of different reports, and they're all titles that expand into more reports. Everything from marketing through to goal setting, through to forecasts and the like. And what these demonstrates is all the data and analytics that sits behind those dashboards. So this is all working in the background as you're closing deals. There's no setup required. It's all working in the background, working for you. And the report we're looking at specifically is our sales funnel report. So having a look at the actual report, we can see that of our MQLs, only 16 actually progressed to a product discovery call or a demonstration, which, as we noted on the dashboard, dropped quarter over quarter by about 80%. So I probably sound like a broken record, but another indicator that our lead quality is probably poor or not a great match for our product. And as we look
I
further
think another,
into the
like when we link that as well, Andrew, another really important point here is that when we look at our MQLs to our discoveries or demos booked, this is another point where we look at hypothesis testing, right? Why are they falling off so much? Why are we only getting 16 when we had, I think it was like, might have been 600 MQLs that come through when we looked at the previous dashboard. So when we look at that, it's like, well, what are we doing wrong with our sign-up funnel, or are we enticing enough for people to book in that discovery call? So I think that's a really important piece as well, that the sales and marketing team can work together to really start to understand why that's happening and come up with a solution.
I think it speaks, Abe, to that again, that diving into the metrics that matter at the top of funnel level. When if our top of funnel is declining, or at least the top of funnel that as defined as a lead in through to quote potentially or to demo, we then look at the components of that funnel, so the individual stages at which we're moving that client through. And if we can then dig down into those and test and adjust the actions of the sales team or the product team in that space, then we see the metrics move, right? So is it the quality of our demos that is stifling our ability to move them into the middle of funnel? Is it the quality of our email follow-ups that is stifling our ability to continue to move them on? And unless you're measuring and looking at those particular metrics at another layer down in a tool like Teamgate, you're not going to be able to drive those insights that you need.
Yeah, definitely. And it leads into, so we'll do a hypothesis test for this middle and bottom of funnel. For time, we won't do it for the top of funnel, but it could be looking at the actual lead quality, lead scoring, how much spam is coming through, how much are actually quality leads, how much are actually a fit for the product, and then also diving into our sales team performance. So, what's the cadence? How much are we engaging them? What is the content that we're engaging them with? Why aren't we getting them onto the discovery calls? But yeah, great lead into regarding hypothesis, because we'll do it for the middle and bottom funnel. So coming back to the report itself, we can see that as we look further in, we're losing the deals in the first two stages of our sales funnel. So they're not progressing through to the additional qualified leads. So even if they do book the demo, they're not actually qualified. So again, we're looking at lead quality or incorrect ICP targeting. But as Abe and Luke mentioned, there could be other indicators, right? There could be, is our sales team missing the mark with their discovery calls? Are the demos ineffective? And again, how can we confirm this hypothesis? And I'd love to hear from the crowd if they've got any ideas of how we can confirm this hypothesis, or even Abe or Luke. Or even Andrew, actually. Andrew indicated it through Baremetrics. So, the report that he showed in regards to cancellations and the reasons there, we have a similar feature, but it's more loss reasons. So where Andrew Rudds was talking about losing current customers, ours is going to be losing current deals. So as you can see, as we look into it, like I said, it's very specific to Andrew Rudds or Baremetrics component, but we're going to look more at the deals lost. And as we dive deeper, we can see that the number one loss reason for Q2 is the prospect has become non-responsive. So what does this mean? Does this confirm or deny our previous theories? For me, I think the biggest killer of deals, and maybe I'll throw it to the crowd, what do we think the biggest killer of deals is? Maybe Abe or Luke or Andrew have an idea as well.
Yeah, I guess time. Yeah. And just really not being committed to the process, or just scoping it out as opposed to being in that deliberate buying phase. And then, time in general.
So what I think as well, that when we look at this, and just not to derail the conversation completely, but for me, this is really powerful, because if you're losing significant amount of deals because you don't have a certain feature, or you don't have a certain component that people are looking for, this is a great indicator to go, well, we would have won 30,000 MRR if we had this particular feature. We should build it. Because I think, Luke, just looking back at the strategic side, is when you look at companies, you go, well, why did you build this? Oh, we thought it'd be good. Okay, you thought it'd be good, but why did you build it? Was it based off you lost deals, or is it based off you lost customers? No, we just thought internally, we held a working group and thought it'd be great.
Thought the market wanted it, yeah.
But the customers aren't buying it. clearly by Baremetrics, and you haven't lost deals because of it, as you can tell by your CRM. It wasn't a good build. So I think that is also an important point to highlight, is how much this drives product development. But
and it speaks to one of our core ethos at Xenon, right? Is follow the data. So without being able to measure what matters, without being able to look at those metrics and interrogate them and garner insights from them, then you're not going to be able to accurately figure out what the market wants, figure out what your current clients need, and then build it efficiently with adequate capital allocation, as opposed to just flippantly spending money trying to figure out what people want.
Yeah, both great points, and I think this is one of the most underrated reports within Teamgate. But for a lot of our small to medium business customers, they don't have the money to be product-led growth, right? They need this data to identify why they're losing deals and allocate their funds appropriately. So this is one of the biggest things that we implement with our customers. But bringing it back to the performance focus, so time. So it could be a product fit, but for me, this indicates a time. And again, another hypothesis that we need to further test. And one of the things we implement at Teamgate for our customers, if they don't already do it, is a 6 cadence touch. So, making sure we're constantly engaged through, whether it's a trial period, whether it's that sales process, and making sure that we're remaining engaged with our customer. Again, like I said, this is just a theory in regards to time. So let's have a look at how we can confirm this theory. So let's jump into another report. So this is our sales process report, and this one is more focused on time. So you can see on the dashboard there, the sales process for Q2 is averaging 81 days. And that's from the initial call through to closing. The last stage, I know as a manager, includes onboarding. So taking that off, we're sitting at around 50 days. Now, when we look at those first 2 stages, we're spending 41 of those 50 days in those first 2 stages. And for me, that's way too long. And as a manager, I know that should be around the 21 to 28 days because of a trial period and then a period allocated to actually close the deal or introduce the customer to the product. So what's the so what? We're selling too slow. Our prospect has either found another product in the meantime, moved on, or they've reevaluated their needs and they've decided that they don't actually need the product. And if there's any questions or points from the crowd, noting time, I'll start to wrap up. But for everything that I've covered today, we've identified a bunch of issues. We've created a bunch of hypotheses, and then we've confirmed some things. But it's completely pointless unless we turn it into an action plan. So, this last slide is just a summary of what we've identified. So, we identified some top of funnel issues, that our ICP hasn't been correctly targeted or targeted within the right channels. We've identified that our output in Q2 has dropped significantly since Q1. So, our sales team aren't making as many calls, booking as many deals or calls. And our cadence from the trial, discovery call, and demo is too slow, which has resulted in, deals lost. Like Abe said, $30,000 worth of deals that we could have closed over that period. And then we need to come up with some proposed actions. And if we already know that our baseline, once we implement these actions, we can actually see if there was any sort of tangible difference. Did the actions that we implement actually work, or was it all for nothing? Do we try something else? Do we A/B test to see which one actually works? So that's all I've covered today. I know we're coming short on time, but I'd love to address any questions or any points from the crowd if there is any.
Yeah, awesome. That's thanks for running us through that, Andrew. I really appreciate it. And one thing that really stood out to me is that being able to dive into the sales funnel quite easily and understand those conversion rates. I know previously working at different companies, it was always a massive hassle to determine things like conversion rate and time in funnel and time at certain stages. And that, for me, is a massive win, because we sent out a proposal and then they ghosted us, or we did a demo and we don't hear from anyone after a demo. We lose 70% of our deals after a demo. Okay, well, let's look at what we're doing for a demo, because it's probably not effective. And being able to diagnose that stuff is really important. But in the interest of time, let's move on to some questions The first one we have is from Chase, and this one's for you, Luke. You mentioned these metrics you look for are often hard to find for founders. In your experience, what's the most overlooked data point?
Yeah, I think I wouldn't necessarily say it's the most overlooked in the sense that they're neglecting it, but it's one of the most, I believe, valuable data points that is not necessarily recorded well, and that's net revenue retention by cohort. And what I mean, and this can come in different flavors, but essentially, if you're going through a rapid user acquisition phase where you're entering the market and you're continually onboarding new users, but those users aren't sticking around, then that tactic is not going to be successful in the long term. So you might have a great face value proposition that gets them into your funnel and gets them onto your product, but then the experience in the product and the experience post-sale is not that great, and they move out within a couple of months. So being able to track your revenue as it comes in and how long it stays with you over time, I think is fundamentally important. And it actually can be a great driver of success. When you look at a company like Snowflake, net revenue retention is probably their primary measure of success. Being able to secure a user at a smaller or a lower price point and then help them grow over time and expand with them, their net revenue retention is consistently well over 100%. And you'll see that, which means they're not only keeping their customers for longer, but they're expanding the amount of revenue from each of those given customers over time. So in a nutshell, I'd say it's net revenue retention by cohort. And the underlying insight you're getting there is, how long are my customers staying with me after I've taken the effort to land them? And that metric can get lost in a sea of new customers if you're just looking at new revenue month to month, because your new revenue and the number of users you have every month might continue to expand, but they're only staying with you for a month or two at a time, then they're churning out. So yeah, I think that's probably the one there.
Awesome. Thank you for that. That's a great insight into, when we look at data points, and net revenue retention is becoming more and more prevalent, especially as we move into this, I guess,
100%.
economic instability, where we look at, well, we need to keep the customers because not everyone's buying more stuff, but they're winning the fight to keep things. So I think it's important that, that becomes a major focus for companies, and we see a major shift into more account management and customer happiness, customer delight, as opposed to
absolutely
winning those new deals, which is still important, but keeping the customers you have is definitely more important.
Sure.
All right, so we've got 2 minutes left, and in the interest of time, I just want to do a quick question around for the group, since we have a varying experiences and different perspective on things, and I'd love to get an answer from everyone. Is there anything our audience should be wary of when tracking metrics? Because often we can be led down the garden path in the wrong direction, or we focus too much on the wrong thing. And Luke has brought up a couple of times metrics that matter. And so I'd love to understand what people should be wary of. And Andrew R., I'd love to start with you for this one.
Yeah, I think one thing people should be wary of is really just making sure that all your data points are in one spot. So when you're tracking metrics, you shouldn't really have it in 3 to 5 different places. I see that a lot, and it's hard to really track and keep an accurate view of what's really going on with your business. So when you're doing it, try to have either one, using a platform to have all your metrics in one platform, or even just 2 to make it easier to report to investors, other teams in your company, and also management.
Yeah, I think that's a big call there, Andrew, where you talk about the technical debt that comes into these companies where they have, stuff sitting in 6 or 7 different components and not being able to provide that snapshot to, more importantly, internally to the company, so people know the direction they should follow. Luke.
Yeah, I think to me, I think back to one of my another organization I used to work with, and we had Tableau, and the Tableau was great, right? It's big, big tool in which you can pump a lot of data into it and gain a lot of insights, but they had it open for anyone to ask for a report at any given time. So someone said, I want to report on this, I want to report on that. And there was never really a next level of, so what? What are you using that report for and why? And I think the trap that we can fall into is that, like I said, metrics are essentially the manifestation of that data that you want to look at. If you look at too much, then you don't get any so what, and you can't drive any actionable insights. So actually, one, measuring what matters, but then also concentrating on the metrics that are actually going to move the needle that you want to be moving. it can quickly get overwhelming, the amount of data that any given company has available to them that they want to start to measure and move. You need to be concise, you need to be targeted, you need to be deliberate. And the second one is, that to me is the difference between like a KPI and a metric, right? So metrics are there all the time. They're all around, they're underlying. A KPI is something you're bringing out. You're actually going to benchmark that metric, and you're going to say, you're going to do X, Y, and Z in order to move the needle from A to B. And this is how we're going to measure that movement, right? That's that difference between KPI. So yeah, probably being deliberate, but being consolidated, focusing on what matters, and really being concentrated on those metrics that are actually going to move the needle you want to move.
Yeah, and that's a theme that I think we can pull out from Luke from today's presentation, is the metrics that matter. And absolutely, and the part that really stood out to me as well there is the so what. Too often we look at the metrics and say, look at this dashboard, I got it's great. Well, okay, that's cool. What's important about it? What's it going to tell us? And then people go, oh, I don't really know. Well, why are your leads decreasing? I don't know. Well, what's the so what that you want to put? What's the test you want to do as a part of that? So taking that next step and building them into KPIs and actionable tasks for the team, I think is a great point to bring out. All right, Andrew M.
Yeah, I'll keep it short, not any time. So I think depending on how you're recording metrics, if it's manual in spreadsheets or whatever, no judgment, but accuracy is key. So quality in, quality out. If it's automated through a tool like Baremetrics or TeamGate, just consistent auditing and spot checking and making sure that we don't let the metrics actually stagnate. We use it as a tool of action versus a tool of record.
And I think that's a really important thing. And for all the sales managers that are watching this, what I'd say is that getting into your CRM and making sure that the sales team are putting the appropriate responses in is going to be more important than a lot of other things that you could be doing. So making sure that health check is there, making sure they're putting the right inputs in at the right time, and making sure that everything's up to date is important. I know it's a running sales joke about sales managers and harping onto the sales reps about making sure that the CRM's filled out correctly. But often what we don't do is provide them with the context as to why we need to do that, because in the end, it's going to help them close more deals and win more revenue. So that's the big part that we need to look at there. Noting we're just over time, I wanted to say thanks for the audience for coming today, and thank you for getting involved with the questions and listening to our interaction. So I think when we look at metrics, it's something that is often seen as a chore, but really it should be, you're not going to go on a hike without a map and a compass. So, being able to use your metrics to drive your business growth, I think is really important. And we saw from Andrew R, Andrew M with TeamGate and Baremetrics, how, implementing a tool like that can really help you with the path to growing that business. And then from Luke, he really showed us from a strategic standpoint about what's important to when you look at investors and acquisitions. So for all the founders or people that are looking to be acquired or get investment in the future, I think this is a really important piece of what data you should have ready and what things you should make sure look good for you as a business. So if your new revenue is growing, your net revenue retention is really good, then that's a great signal as a business. And you should say, I'm a worthwhile business that should be asking more multiples because my metrics are really good, and it shows in all the data that I have. So thank you everyone for your attendance today. And hopefully it was informative and also provided a lot of value for you as you go on the journey.
Thanks, team. Thanks for the invite. Thanks for coming along.
Cheers, everyone.